I don't know, man. It's really fucking weird. That is really weird. I've got no idea what's going on. I don't know, folks. I have been. I really don't know what is going on. Um, I mean, for those who don't know, all righty. And it's Tuesday, December 16th. And for many of you out there, I have been a pretty consistent watcher of Tasty Trade, or Tasty Live as it is now. And I don't know if anyone's got like really like a bad vibe of late. I do. I don't know what it is. Sosnoff had left in the morning, and although I didn't really like how he traded or what he did, overall, I did like the commentary because it seemed that it was different from all the other stuff that was out there, right? Like if I want to get like technical analysis or news and that type of thing, yeah, I'll listen to the news, or I'll go listen to somebody on YouTube if I want technical analysis, who's just like everybody else. But now it seems that he's gone. It seems like that's all they do now, and that's all they talk about. And it's really changed. I don't know if anybody's noticed it. I have, and it's quite annoying, honestly. It just doesn't, because if I want to watch a broadcast about trading, I want it to be an alternative to what else is out there. And it's actually now becoming just like everything else, where they don't really talk about as much, although there is programming now that they do talk about, the Tasty Trade methodology and selling premium, but there seems to be more and more and more programming related to all the regular garbage kind of going on out there. And it's not good. I mean, I think I'm not alone. I think I think maybe I haven't really seen too much public complaints about it, but I think it's going to come, because if they continue down this road with this platform, I think they're going to lose. They're going to lose people, because they're losing me. And I was an avid listener for since they started. I listened to them every single day. Even if I didn't agree or did what they did, I mean, I listened every day. But now I find myself tuning out because I can't even hear it. I don't even want to hear it anymore. Because look, I don't want an hour worth of programming on, technical analysis, and this is a swing, and this is this pattern, and here's what's going on in the macroeconomic world. It's like, I don't need that. I don't need you to do that, because you know what? There's 1,000 other places already doing that, and I don't tune in for that. So anyway, just a real disappointment, quite honestly. And anyway, so that brings us here. Now, there's going to be a lot of confusion, I think, in some quotes and things going on, because we're in contract role. And, depending on what platform you are on, most of the major futures platforms and firms have rolled their contracts. And that's why you're actually seeing here on the continuous contract on TradingView that it's showing that the ES is actually up 48. It's actually not. It's up 47 or 48, because it's now trading the March contract and not the December. And so that's what the difference in the prices are, and that's why these are both reflecting, all of these are reflecting this big increase. The actual movement is not that much. And you can see here reflected on the chart that if we really were up 40 some odd points or 40, whatever, 48 points from yesterday, we would be way up here somewhere. So anyway, so you got that going on in the indexes, as well as some other movement in some other things that I think are actually kind of putting some pressure on the market as well. You have crude oil, which seems to really be kind of falling out of bed here, and it has to be related to the peace talks going on over in Ukraine. And I would assume that as a peace deal gets closer and closer, you're likely to see crude continue to contract, which is kind of sucky for me because I'm long a bit of crude oil here, and the two positions that I did take are not doing well. And then natural gas with a huge move. And I do not trade natural gas very much. But in the last week, we had some really incredible ripping moves. I mean, we've ripped all the way up to 54, $5.40 some odd cents. And then today, less than literally a little over a week and a half, we are down now to 380, 390 level. Now, I had done a trade in natural gas because the volatility in here was relatively high. I don't trade natural gas very much, maybe a couple times a year. And this happened to be one of those times. And what I had done is I actually sold an iron condor in natural gas futures. And I think up to today, it really hasn't done very much at all. In fact, I think I'm actually down quite a bit, down $85 in it, like so many other things. But I'm down about $85. It was pretty wide when I had put it on. Not so much anymore. But this is what natural gas does. Natural gas is a beast. It is a beastie contract, and it does move, and that sucker moves. When it moves, and when it's dead, it's dead. So, but it's moving right now. So that's kind of in play. I think there's still a lot of opportunity in there. I would say I would, if I was an avid natural gas trader, I'd probably be saying buy the dip here. But then again, there never really is a dip in natural gas because it can continue to go down longer than you can stay liquid. And it can continue to go up longer than you can stay liquid. So anyway, that's what's going on in natural gas. And then as far as crude oil, it has come down. I put this mark here from a long time ago, actually. And we are now in this range. And I knew full well when I put my trades on in crude, my long trades, that I may have been early. And, and that is definitely the case. But I think down here, we're bound to get something, some kind of bounce down here. Now, I wish I could say I knew where the bottom was, but this overall does appear to be somewhat of a level that we could expect to get some support in here in crude. Now, crude being what crude is, this very well could just get blown through like it doesn't even exist, because I by no means think I'm the only person on the planet that has this line down here signaling that this might be some support. I'm sure I'm not. And there may be a line down below that I'm not even aware of, that's where the actual support is. But if you do look here, there's a reason why I have it here. On the longer term daily, it is a point of control. And as you can see, there is a lot of volume at this area. Now whether it holds, I don't know. Really, all depends on what happens and what the market perceives. But from a historical point of view, this appears to be about the median price of crude oil. So I know I don't talk about crude oil very much, but we're going to talk about it a little bit today. So I kind of see myself adding a little bit more. I mean, here again, in full disclosure, it's one of my positions that I'm down on. And I'm down on many. As you can see here, there are many positions that I am down on. But here are some of the trades that I'm in. I'm mainly out in April in the USO, and I'm also in a calendar spread here in January, April, right? I went out to April, kind of gave myself time on this because I knew I was early. And I do have some flexibility in my calendar spread here that I'm not going to necessarily exercise at this time. I'm going to give this maybe probably another week or so. I mean, I still got 30 days on this one, but I could realistically roll this call out to February. And this is why I actually did the calendar spread, so I could give myself a little bit of time to kind of grind through this one. So I am going to be interested in doing something else here. I'm likely going to go out into April again. And if you haven't done anything yet, I'm likely going to step into something very similar to what I had done before. I'm particular on, I was going to take a look at possibly like a 68. $73. Right? Relatively cheap trade, a little bit out of the money. Again, I'm out in April. I'm 122 days deep. Expecting a little bit of a bounce here in crude. Volatility in here it sucks. I mean, I'm not going to deny it. It sucks. I mean, so you're really not doing a volatility play. If you want a little bit more of a volatility play, perhaps you do a calendar spread. If I were going to do a calendar spread, I would likely do I would probably stick around the 65 strike in April, since it's in the money. And then I would do the January. Let's see. I don't think I would do this. Yeah, I'd probably do the 70. I'll probably do something like this. And that's what I would do here if I was looking to do a calendar spread. You're going to get yourself 27 deltas long. You're going to use about $500 worth of buying power. And basically what you're doing with this by doing the calendar spread is you are selling a little bit shorter term volatility here with this short call in buying, and you're kind of reducing your cost layout. And so I would stick to something like this for something in the USO here. And that's what I'm looking to do today. So either one of those. Now that I'm looking, I kind of like the calendar spread better because it gives me some flexibility to maneuver this call, right? Since I'm in January, I can always roll it out to other months ahead. So Looking at that as well. So there you go. Right off the bat, so a couple trades in crude oil. That's really all I want to say about that. I don't want this to be a crude oil discussion because that's going to be boring. As far as like the ES, I'm probably not doing much of anything. I have not been trading futures last couple of days. I haven't even done a broadcast in a couple of days because I just really haven't done a heck of a lot. Because honestly, the price action it's been pretty choppy. We've gotten those moves where it's drifted one way or the other, whether it's been on the open and then we've drifted down throughout the day, and then we've gotten some bounces. But to me, it hasn't really been anything worthwhile putting any risk on in any of the markets because they've just been kind of all over the place. And I expect this to happen, you'll go on, likely for the rest of the year. And there's a lot going on this week also with all the economic releases and everything else. But I don't know, I'm kind of from the camp that I don't think when all these economic releases are all said and done, I think it's going to all pile up into one big fat nothing burger. Because I think there's going to be some good ones, there's going to be some bad ones, and then I think overall it's not going to matter. The market is what the market is, and I think that's what we're getting here. And I think overall the market in general is happy with where things are. And that's not a bad thing either. So, and I see that in the NASDAQ. I see that in the ES. Also see that in the Russell. But I do have a little bit higher hopes for the Russell come the new year than I do the NASDAQ and the ES. I think this whole, again, this is just my take on what's going on. I think this whole AI craze that they've labeled it, I still think it needs another month or two into next year to kind of settle before we move on from it. Because a lot of these underlyings continue to take pretty decent hits, like even AVGO, Broadcom, killing it on earnings. Let's just get rid of this. Killing it on earnings, right? And they have just continued to just blast this thing to kingdom come. I'm just as guilty as anybody else. I did buy the dip, so I'm actually in a couple of long trades. I gave myself some time. I went out to April on this one as well, either April or March. So I'm in a call spread in this in April and March. I think we do have this area I have marked down here, which, hopefully symbolizes a good support zone. Again, just from the chart, it does look like it does represent a pretty nice support zone. But, hey, time and market action will determine whether that's true or not. But that seems to be the case in quite a number of these, even like a SanDisk that's had literally not a downtick for, 6 months and has just like grinded higher, endlessly. And now seems to show some signs of a little bit of damage. There does seem to be some room for these to kind of come down. So even this, if you go and look here, you got this area down here, which looks like this may end up being the place where this thing lands. Now, I don't know, folks. Again, I'm just going by what the charts are. It looks like it's bounced in this area before, not once, but twice, and even a few times here before it actually ratcheted up to all-time highs. But we never know until we know, right? That's the amazing thing about the market. But again, here's, AMD, and all of these are all about the same, right? They all kind of in that same kind of zone in their trading patterns. And so I'm thinking that, just looking at the price action, that, there might be a little bit more downside for some of these. So kind of buyer beware. Not that you shouldn't look. I'm guilty as anybody else. I have taken some long positions in these, knowing that I'm probably going to be early. But I'm not doing anything extravagant and large that's going to kill me. So if they are things that don't wind up turning out the way I want, I'm still going to be able to wake up in the morning and have money in my account, and I'm not going to, so definitely worth keeping it small. I think out of all these underlyings, I think Micron has earnings coming up this week, right? Tomorrow, Wednesday the 17th. Wednesday. So we'll likely take a look at that one here in a minute in a little more detail. There is some volatility in Micron still, I think, left. But although, there is that, also expect that there might be some more downside to this one. I see this one with some potential to come back down to 223. Notice, folks, I'm not picking these spots out of a hat, right? It's pretty obvious. I just don't want to make. I don't want to make like charting like something that's basically easy, but honestly, it is basically easy because look, all I'm doing is like going back and looking at where it went down in price and went back up. And then you look back a little further and then say, oh, were there any other places where it potentially came down at that level and went back up? And you have basically here too, before it actually ratcheted up to all-time highs. Now it broke it and it went down below, but that area as a whole seemed to be a place where it did rally from that spot. And that doesn't mean it's going to hold there. But again, it does give you something to look at. But that's the case in all of these, including even the mighty NVIDIA. This one as well. I have the mark down here at 163. Looks like another spot to me that looks very interesting down. When it starts getting down near 163, I'm going to have to start saying, now Oracle, this is kind of another animal of another kind, because I kind of thought that this area here, this 186 layer, was going to be it. And they continued to just bash the living piss out of this. And I don't know where the bottom is. I mean, they seem to have spooked out the whatever Oracle's doing. And, it's bonds, it's media, it's public opinion. They're currently being looked at as the evil empire right now. Oracle as like the company that blew up AI. And in a world of social media and media hype, it's going to be hard for Oracle to shake that stigma here. And the only thing that's going to have them shake that is time. Unfortunately, time does seem to heal all wounds. And so that's kind of what I think has going against it right now. It's definitely nothing fundamental or anything like that, because they seem to be doing all the right things. Their earnings were not that horrible. And they seem to be the kind of epicenter of the whole AI kind of space race, in my opinion. So anyway, they're going to have they got some damage control to do socially, I think. And I think that will actually heal a lot of the negative price action. I, on the other hand, I have not added anything new to my Oracle positions. But, if I have to tell you, if you don't have any, I think it's worth taking a stab at something here on it. It's definitely worth it. But this holds true in all of these. They all don't look, they're all kind of trading the same. The Amazons, the Microsoft. I mean, if you laid these on top of each other, they're all, for the most part, looking very similar. Other than Google, Google seems to be the one that's kind of run away with it. But I think even that has now, I think reality kind of set in with Google that it's not what everyone had expected it to be. And this, Google may even have a little bit of payback to give. Then you started getting into stocks like IBM, which this stock, I mean, to my detriment, because I have never really looked at IBM most recently as kind of a player. This stock looks great. I mean, it really, really does. It's almost scary. I think if you were to take IBM's name off of this stock, if this didn't say IBM, I think you would have people have a completely different opinion of this stock. If you were just flash this up on the screen and say this was, I don't know, AMD or like, just for example, AMD, you'd be like, oh, wow, really? No kidding. But then you say IBM and you're like, what? Really? Really? But this thing is just a monster. This has been a monster. And I wish I would be able to, I wish I could say I seen it coming, but I didn't. But yeah, IBM is looking really well. I think out of all the tech stocks right now, and I have this actually as a cloud. Now, what I did is I broke my big tech up the best way I felt that they had their role. Now, again, this is all strictly personal on how I thought they should land. And here I have, chips. I have cloud, right? Because let's face it, what puts Amazon in the tech sector is their cloud business. Microsoft has Azure. Oracle's got OCI. Mongo is a cloud player now because they have their databases in, right? Google's also got a cloud platform. IBM, right? Big in the cloud, right? All the Red Hat, blah, blah, blah. And then Meta as well, because all their stuff runs. Now, Meta was kind of tough because Meta, I felt, could kind of play in both of these, as well as many of these can also play in this software. But I think I was trying to focus on what their primary function was. And then when you get down to software, that's where these actually all came in, where you have the CRMs, the CrowdStrikes, the Workdays, and Datadog. And look, these are all companies that there could be a bunch of other stuff that I missed in here. These are what I watch, and these are what I trade, and these tend to be the most liquid of all the stocks. And that's why they're here. They're not just here because of what they do. They're here because they're liquid and they're worth trading. I mean, I could put a lot of other names in here, but they're not very liquid and they're not very good to trade. Now, they may be fine to own, but, I'm not looking for that. I'm looking for stuff that's not only good to own, but also good to trade. So that's why and then I have other, because I really didn't know how to calculate many of these, because this is kind of a consumer discretionary, right? Netflix. Apple is kind of like not only, they make their own chips, but they're kind of like a hardware, software, right? They kind of fit a lot of different bills. Same thing with Tesla. They're tech. They have this, same thing. Palantir could probably be software, but they're not really software, right? It's kind of, but anyway. And so that's kind of how I broke it up. But so based on all the stuff here, though, trying to get square here is that all these stocks kind of have the same type of patterns where they all appear to be coming into some area of support. And again, we don't know what that is, but from a chart point of view, other than maybe MSTR, I finally got out of my short position in MSTR. I'm actually waiting for a little bit of a rally in Bitcoin here. I'd like to see Bitcoin maybe rally back up to about 90K, and then I will re-short MSTR. I had this line marked down here. We just about got to it, but not quite. But I did, that was kind of my target, but I just felt like, you know what, I was up big and I was like, let me just get out of it while I can now, because, we went down so much on Bitcoin. So I would like to see this go back up, over like 170, I would say, maybe even 180. And I will be more than happy to short this again. And we'll look at that one real quick. MSTR. Not a lot of volatility in here. I wouldn't recommend selling anything in here, though, because I just don't, I don't know. I just wouldn't feel comfortable being short calls. I'd probably be okay shorting puts, but so if I were to look in here and get short again, I would probably I would likely look at February. I don't know if I'd be in Jan, because January is at a weird spot where at 31 days, things need to happen in there relatively fast, and I don't know if it'll be a fast burn down here, especially if Bitcoin rallies back up to 90. It going back to like because I'm looking for this to go down below 150. And I don't know if January is enough time. So I would actually look at February. There seems to be a little bit more implied volatility in there. In February, if you notice, it's at 96, and that's likely because earnings are out in February. So you are getting a little more bang for your buck. I'm not going to be selling anything, but I don't know. I mean, I'm looking in here, and there is some really nice premium out here at the 1 standard deviation. There is some nice. Yeah, it's still not right at 44 IV rank at a 1 standard deviation on either side. I'm still not even getting $1, especially being out 66 days. So there's not enough volatility in here for me to personally sell anything. All right, so there is no trade in there. I thought maybe there was I thought possibly there could have been a volatility trade in there, but there's not. I mean, if you're going to sell, let's go back to that. If you're going to sell volatility in MSTR, you're going to need to do it in January. Yeah, you're going to need to do it in January. And let's see, a 120, there's a $30 move priced in. The 120, 115. I don't think you're even going to get $1 in here for a 1 standard deviation, to be honest. I don't think it's going to happen. No, you can't even get $1. So again, there's not. Oh wait, that's the wrong one. Way out. I thought that looked a little too high. Yeah, I don't think, just a little over $1. And I'll be candid. I would go, if I was going to go, I would go inside. I would go inside on the call side. I may even go down to the 195. That's a 27. Yeah, I would go down to the and the reason I would go down to the 195 is I want to skew this. I'd want to skew this, and I would probably take this up to the 125, just so I'm grabbing a little bit more money. And to me, that's the trade I think to do in MSTR, as much as I don't particularly like shorting calls in this, just because this one can tend to be a face ripper. But if I try and avoid my personal, opinion and stick to mechanics, which is what I should do, I actually like this one. And I actually I'm likely to put this on. See that? It's amazing how you find stuff when you start looking. I kind of like this. So it's a 125, 120. It's inside. Now remember, this one's inside the one standard deviation move, right? Because here's our one standard D here. Here's our one standard D here outside. I'll do it for $1.35. I'm not going to do it for less than that, so I would likely put it out there. It is skewed a little negative, but for the most part, it's absolutely a delta neutral trade. You're going to use $365 of buying power. You do only have about a 60% pop, and that's the reason for that is because we're inside the standard, right? If we move these out, as we move these out away or closer to the one standard deviation move, that probability of profit will go up, but our premium will go down. So, objective here is to try and capture, not only capture a little bit of this volatility or some premium here, but also capitalize on the fact that perhaps this does stay in the trading range over the next 30 days. And the thing about this being only 30 days old, too, or only having 30 days, likely in about a week time, maybe longer, but maybe in about a week, we could dump this one way or the other. All right, and so I like that one. So I'm actually going to put that one on. And so you got that one in the queue. All right, pretty cool. I didn't think I was going to find anything in there, but I do like that trade because, again, I'm expecting a little bit of bounce here in Bitcoin, and that trade doesn't really bother or hurt me by that happening. And I'm well outside of this expected move here. I'm down to the 190? Right? I was at the 190. Where was I? I don't even remember. See? Getting old. Why didn't it come up as working? What is going on with this platform, man? You know what? I don't know if anybody else has this problem with this, but literally this does not refresh. And I find if I keep it open, if I keep the platform open overnight, a lot of times, it just doesn't refresh. It's the most fucked up thing in the world. It doesn't refresh. And it's why? You're connected. I'm connected. Why? Again, because it's the Windows, because I'm guaranteed they use Windows in the background. And Windows loves to be restarted, man. Just loves it. Anyway, so we're in that zone there. So that's not altogether a bad trade. And then we'll look at Netflix a little bit here. I'm leaned in a little bit short in Netflix. I do think there's going to be a little bit more downside. I do have an area marked down here of $91 or so. We're pretty damn close to that, but that is kind of my target to the downside. I think once it hits around $90, I think you're going to see a lot of buying start coming back into it, if not already. But I do think it's going to be something that doesn't go away. Even if we do bounce, I think it's going to take a bit of time, probably likely until, March or March sometime, February, March, before it fully, gets back over $100. And so that's kind of the play in Netflix. I have a number of positions in there, none of them working. I'm short some calls here. Those actually have worked. But I'm also in this bastardized. So I actually had this spread, this call spread in here before the split. And so that's why I have this. But I did do this. This was a calendar spread that I have actually since managed. And you can see that I rolled this call. And so I've managed to, reduce the loss here. I mean, I don't think I'm going to ever wipe this out, but I'm managing this. And that was why I did this calendar spread. is so that if I was wrong, I would be able to manage this. But I would like to start leaning in here a little bit long in Netflix, even though I'm in this kind of bastardized thing that I'm trying to recover from. And the trade I was looking at in Netflix was possibly another calendar. And I would like to stick to March. I'm probably going to go in the money on this one. I like the 90 strike. And then I would come up here in February and do the 95. Now, it's going to cost you a bit of change. This one's going to run you about $300 or so. I thought it would be more than that, but this one's going to run you about $300. You're going to get about 10 deltas on this. You got about, this doesn't show in here, but it's about a 62 or 63% probability of profit. This is all messed up because this shows my positions. I think if I get rid of them, it will actually clean that. Yeah, it cleans that up. No, it doesn't. It doesn't clean it up. It's still a mess. But I'm looking at something like this. So like a 90-95 calendar spread. Staying out of January. Like I said, I think there's going to be something that kind of grinds away. But I do like that trade here on Netflix, going forward. Although I do think there might be a little bit more downside here. The short call should insulate you a little bit. It's not going to be a lot, but a little bit. So there's a trade on Netflix that I kind of like, and I would try and do this one for a 375, and I'm going to throw that one in because I kind of like that one. All right, so there's Netflix, and then as far as like Tesla and Palantir, I'm kind of staying away from either one of these. Not for negative reasons. I'm already loaded to the gills on Palantir, and I'm already loaded to the gills on Tesla. If anything on Tesla, if and when, again, I say if and when it does get to about $500, I think that may signal a bit of a relief sell-off, and I may actually start leaning a little short on Tesla at that point. But until then, I'm just going to stay away because if you weren't in it down here at 380 just a month ago, you missed it. You had a couple of chances here along the way, but you absolutely missed it, and it continues. It's actually down a little bit today, I think, pre-market. And the same thing with Palantir. You look at this one, and you drill back on this, and for a stock that everybody, I mean literally everybody, was piling on and being like, oh, bebop, right? Bebop, bebop, bebop. It's over for them. They don't have anything going on, blah, 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 blah. And then the more I hear that, the more I trigger in the back of my head is the top's not in yet. You know why? Because everybody and every asshat on CNBC is all saying the same shit. Oh, it's overpriced, blah, 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 right? And then every other jackass on social media, blah, hey, blah. It's like, okay, it's not over yet. Are all those things true? Yeah, they could be. I guess. I don't know. Again, what does overvalued mean? I don't know. Who the hell knows? Amazon was overvalued for decades. And I remember vividly how many times it would be like, oh, Amazon, blah, 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 blah. They would come out for earnings come out, and they would just blow up and just go higher. And rip everybody's face off, and the people would be like, oh, the valuation. Oh, and then you'd get the guy going, well, the PE ratio. And it's like, dude, shut up. I mean, shut up. It's not 1950 anymore or 1960. Nobody gives a shit about that. People just want to make money. Nobody cares. If they have an exciting business and they happen to be making money, that's all people care about. That's all people care about. And they have something for people to get excited about, then yeah, okay. And look, it might be all hot air and whatever, but hey, that's what we do now. And when it's over, is it going to be a bloodbath? Yeah, probably. But until then, shut the fuck up. Who cares? Who cares? Who cares? Now, I don't know. That's why I'm kind of staying away from him, though, because I'm, and I have every intention on this one, if and when I'm hoping, look, I don't know, but if and when it does get over $200 again, I probably start leaning short. No question about it. But until then, I'm just going to kind of hold the rope. All right, so there you go on big tech. And then let's pivot and just go to Micron because they have earnings. This one, I'm kind of going to be expecting this. Again, this is all expectations. I'm kind of expecting this one to be a little bit of a big fat nothing burger, only because for earnings, only because of just the reaction that we've had for the other major players. I think they're going to step into this with possibly with a little bit different language to kind of cool everybody's jets. Because I think what happened with the other stocks, Broadcom, whatever, is whatever they said, and I don't listen to these calls either, but whatever they said in the after earnings call, in their guidance, all the other shit, they spooked the shit out of everybody. So I don't think Micron's, I hope they actually take a lesson from that and they just kind of walk gingerly. But I think Micron, you could feasibly do a one standard deviation here and you're going to get paid pretty nicely. I mean, so here's a one standard deviation move, right? The 190, 185, 280, 290. Actually, it's going to be 10 wide. So they're going to be 10 wide, and it's 10 wide because we don't have the strikes up here. We don't have the $5 wides. We only got 10. So we do 10 on the downside. So it's more Strangle-esque because we're using a little bit more buying power. But, and based on this price, I would likely believe by the time you do this, because you're going to want to do this, it's tomorrow after the close. So you got a whole nother day to trade this. But this is something you're going to want to get on. You probably could do this for about 280. And that is a one full standard deviation, 67% probability of profit. As delta neutral gets, decent theta on that, right? So you're going to get a decent amount of burn on that just for an iron condor. That's a decent theta. You have that, and there is a decent amount of volatility in this one that you can get paid for it. And it's fully manageable, meaning that, look, if your strikes get pressed one way or the other, you have plenty of time. You're going to have 30 plus days to either roll your calls down or roll your puts up, depending on what happens. All right. And, so there, that nice trade there in Micron and actually a little bit of a relief that there is finally something tradable out there because, let's face it, there really hasn't been a lot. And then just looking down out here on the volatility, right? I do this every day. It's almost kind of like OCD, ADHD type of thing that I do every day as I come in here on this high option volume list, rank from IVR down, and I go and look and see what's hot and what's not. I look at something like a Hut 8. I'm already in something like this, but they absolutely crushed this thing yesterday. I think it was down like $4. And let's switch gears here and look at Hut 8. This is another one that I've been a bit bullish on, not bullish, but buying in here as it's come down. I mean, realistically, there should be a bounce somewhere around $30. I don't know if that's going to happen. I'm early to the party. I'm short a 35. I think I'm short the 35 puts, if I'm not mistaken, and I'm getting Yeah, I'm in a 35, 30, but I'm out in March. And you can see I am not doing well. Yes. Yeah, I'm not doing well at all. Yeah, I'm not doing well. Yeah, I'm getting a bit banged up on this one. The only thing I got going for me on this one is time. Right, I'm in March. I got 94 days. I still kind of like it though. Again, all these stocks are kind of under pressure, getting hammered. But in being mechanical, and I'm trying to be mechanical. Volatility remains high in here, so at least that strategy holds true here, and we go out. I mean, there's a ton of even implied volatility all the way out. Even I'm in March. There's a ton of implied volatility out here, as well, and it kind of rolls out. Once you get past March, it kind of comes back down. So I mean, I kind of. After yesterday's sell-off, I can't help myself. I can't. I can't help myself but look in here and try and do something. And I'm looking at maybe a 30. I'm going to change I don't know what the margins are like. Let me take a look. I don't think the margins are I don't think the margins are that bad, but I don't think they're that good. Yeah, they're not that bad, but they're not that good either. The fact that it's $1,000 worth of buying power for a 30 put is kind of stiff for a $30 stock. If I would think margins were good in here, it'd be under 1,000, right? I would expect this to be about $700. But so the margins are a bit stiff on here. But, I do see that I think selling a 30 put in here, and then based on the chart, right, trying to mix a little technical analysis with a little bit of options strategy. You got $30, which looks like it could be a decent place for support, but then again, who knows, right? This thing was $12 less than a year ago. So who knows? Could be all an illusion. But again, just trying to stay mechanical. Selling a 30 put here really doesn't seem like a bad, especially only having 30 days left. And we don't need a real big, kind of only need one of two things to happen here. Have a little bit of a volatility collapse in here, have volatility go from 80 to say 60 or 50, and that would come in nicely, or the price go up, or both. But knowing full well that both as well could not happen. So I'm looking at that, and again, I'm trying to stay mechanical looking down this list. So there's that one. There's Hut 8 on the list. This as well, the GDX, but I've said it before, I'm not entirely a big fan. I'm not a big fan of this. And especially even though volatility is high in here, I'm not a big fan of selling volatility in here because it just, I don't know, on these ETFs, it just never seems to, I don't know, selling volatility on ETFs never seems to really work out as good as I would think it would. It's definitely a lot easier with stocks. We already talked about Micron. SanDisk is on this list. This one, though, does seem to be a little illiquid, right? We're in January. This is SanDisk. I would expect a lot of these open interest numbers to be well in the thousands, and there's literally only a couple of strikes that even have 1,000 open interest, which to me this doesn't really symbolize high liquidity, which again makes me question why this is even on this list, because I can't see this being high option volume or on the high option volume list with open interest like this. It just seems ridiculous. Like almost like this is on here because it's one of those stocks that's hot, and so they put it on there to make, because they know a lot of people look at this. That's another thing that's going on with Tasty Trade. They seem to be changing their approach with some things where, you know, I think before their change in direction, you wouldn't have seen this on here. They wouldn't have allowed this on here if it was a pure option volume. So I think they're now putting shit on this list now that is more a marketing, and because the stock's in headlines, that they're trying to capture that business. Again, I don't know if that's true, but I'm just trying to like interpret why is this stock on the high option volume list when there's not any strikes in January, even the ones in the money, and don't even have 1,000 contracts open. So, you know, something's up with that, right? Again, totally under my discretion here, in my opinion, but anyway, so I question that. Another one that I've been kind of kicking the tires a little bit on is this NBIS. Did pretty well with it about a month ago on a couple of trades. Good volatility in here. All these stocks have been, I think they crushed this one yesterday too. I have this on the list here too. I think they slammed this one pretty hard. Yeah, this one was down $6. But again, coming into a spot around $78. Is it a support area? We probably got another spot down here, which is 62. You know, again, trying to be mechanical. They got earnings coming up the end of December. So might wait on that one, and that'll be an earnings play. And then we start getting down in here, and you got the Galaxies, which I have all these on the, and yesterday these all got kind of banged up pretty good. Iron, I'm already in a trade in that. Nike, there wasn't really much. I was playing around with that one too. I didn't see much in there. Oracle's on the list. We talked about that. And things to do. I think the really only thing you can do in there is maybe sell some. And then you start getting down, to me, you know, once you get under 50, you start getting into the more discretionary plays, whether you're going to sell or buy options. To me, I just, you know, it's really got to be worth it if you're going to sell options if it's under 50. That's just my opinion. And we get into many of the other stocks that, you know, many of you have probably traded or have shown some interest in. But there's nothing really there outside of that. And then I kind of lose interest after that. So as I get there, and that's really it. And so, you know, looking, there isn't a lot of there right now. All right, and so that's it. So we did have numbers come out. And again, I was spewing, but again, looks like a big fat nothing burger. We did rally a bit, it looks like. Let's take a look at what they were. I don't know what they are, but it looks like they weren't that bad. Average hourly, let's see, 0.4, 0.2, 3.5. 3.7, 3.8, beep, 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 bada bop, bada beep, bada boop, bada beep, bada bop. 1.4, blah, blah, blah. Government payrolls are down. Oh my God. That's actually a good thing. Home, blah, blah. Again, look, what does all this fucking mean? I don't know. Who the fuck knows? Red book, blue book, blah, 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 blah. Unemployment rate went up. Is that what it looks like here? Yeah. Right? Unemployment rate went up to 4.6. That's what it looks like. It went from 4.4 to 4.6. And the U6 unemployment went to 8.7. All right. So there you have it. All right. So, and it doesn't look like the market cares. Does it? No. It doesn't look like it gives a shit. No. Does not look like it gives a shit. Doesn't look like it cares. No news is good news. It looks like gold ticked up a bit on that move, though. Gold definitely went up. Gold definitely ticked up, and so did silver because they were both red. All right, and that's it. That's all I got. I got nothing else. So have a good trading day. Trade them tight, and hopefully I will be back tomorrow.